Hi, everybody. This is Peter Schiff for the Schiff Gold Friday market wrap, except today isn't Friday. It is Tuesday. I was going to do a market wrap on Friday, or I would have done one, except I was out of town for the money show in Orlando. My plan was initially just to skip one Friday and to wrap up 2 weeks this Friday. But given all of the action over the past 3 days, I didn't think my followers or Schiff Gold customers would want to wait until Friday. So I am going to do an early market wrap today on Tuesday. Yesterday, gold hit a new all-time record high. It almost hit 4,380. It got to like 4,378 and change. That was yesterday, an all-time record high. It took out barely the all-time record high we had set on Friday for the price of gold. And in fact, last week on Friday, silver traded above 44. It almost hit 44 and a half. We topped 54, excuse me. We almost topped 54 and a half. We got as high as, I think, 54.40 and change on Friday. Remember, the last time I recorded a market wrap, which was a week ago from Friday, silver had just closed above 50 and gold had just closed above 4,000. And so by Friday of last week, both gold and silver had added another 9% plus to those records before we had a violent sell-off on Friday. In fact, from its high to its low, gold dropped $180 intraday. I had never seen a one-day move that big in dollar terms until today. But let me finish up on Friday before I get to today. So we dropped about $180. Silver dropped about $2.50, but still managed to close the week. I think 51.75, record closing week, up 3.5% on the week. Gold closed the week despite that sell-off, and it ended up down about $75 on Friday. Gold closed the week above 4,250. So adding $250 to the 4,000 close that it hit for the first time at the end of last week. So everything was going well until that Friday, but we still had a good close. But what happened on Friday was a lot of people after that big reversal, a lot of people were saying the bull market is over. That's it. Get out of gold. You got to sell, especially the crypto community. I've never heard them so united against gold as they were on Friday. And they were so excited to proclaim the gold bull market dead because they said this is the beginning of the rotation out of gold into Bitcoin, which of course is more wishful thinking and a bunch of hype. Yeah, they really want people selling their gold to buy their fool's gold to kind of prop up the price because Bitcoin is not really doing anything recently. In fact, it's been in a big bear market relative to gold, collapsing by, I think, over 30% relative to the price of gold until the last couple of days. Now, after all of that negativity, and in fact, I watched over the weekend, Bill Maher did his weekly show, and he had Andy Ross Sorkin and Mark Cuban were on talking about gold and mainly just making fun of it, right? Not taking it seriously, kind of laughing it off. In fact, it's not just the Bitcoin community that was united against gold. Pretty much everyone on Wall Street is trying to label this, a momentum play. Gold is like a meme stock. People are just buying it. They're getting carried away. There's a lot of speculation. When that's not the case, not at all. I mean, we finally got some media attention when gold got above 4,000 for the first time. But most of it was kind of skeptical as to why gold was rising and not a lot of concern being expressed as to the warning that 4,000 gold may portend. Anyway, so on Monday, following this sharp sell-off, gold rallied $120 intraday and closed up about $105 on the day. So made a new high barely from Friday and closed at its all-time record high close. I think we closed around 4,360, something like that. I mean, the highest daily close ever for gold. Silver didn't totally recover, but it still managed a nice day, closing above 4,200. I mean, closing above 52. I'm getting my numbers confused here. Closing above 52. So again, very strong. Yet more negativity about gold, trying to scare people out of gold, get people to get rid of their gold or not to buy gold who might have been thinking about it. But today was the topper because this morning, gold and silver got hammered dollar-wise like I've never seen. So gold at one point was down close to $300 on the lows. I mean, not quite. I mean, maybe down 280-ish, something like that. We got, well, maybe no, 260 might have been about the low. We got just below 4,100 on gold, and we settled at about 4,125. Now, despite this 6.5% decline in the price of gold, gold is still above 4,000. The price that gold closed today would have been a record and was a record when it got to this price last week. So all we did is crash to the record highs from earlier last week. But I think this is going to do enough damage to the psyche of some potential buyers that they're going to be scared out of this market when it rises to 5,000 and higher. I mean, that's what this type of decline does. Now, with silver, it was even more dramatic. Silver was down about $4 on the low today, closed down about 370, back below 50 at 48.70-ish. So silver wasn't able to hold 50, but gold held 4,000 like a champ. And I really think that when it comes to gold, 4,000 is the new 3,000 because gold's got real serious money buying it. And I think there's enough money to keep gold above 4,000. That doesn't mean it can't trade briefly below it like it did after it topped 3,000. You had, times where gold got a little bit below 3,000, but it was a great buying opportunity. I think the same thing will be the case with gold. If it gets below 4,000, you want to buy it, but you don't want to wait for 4,000. 4,125 is close enough, right? If 4,000 is really the new floor for gold, if you buy it 4,100, 4,200, you're getting a pretty good price. Silver, given the fact that you have more retail investors, speculators involved, is far more volatile. So it couldn't really hold 50. But I think 50 is no longer the resistance that can't be surpassed. It was a massive double top. The market has already shown it can get above 50. We got to almost 55 in silver. And now we've had a huge shakeout, and we're barely back below 50. So I think this pullback is a great pullback. If you thought you missed the silver run, and you might have when it was above 50 and off to the races, buy it now. Immediately after you listen to this Schiff Gold market wrap, go get some silver if you haven't already done so. Take advantage of the sell-off. Take advantage of the sell-off in gold too. If you need more gold, I think 4,000 again is around the floor. We're going much, much higher from here. And, bull markets don't end. A lot of people are now singing, the funeral for the gold bull market. Hey, it's over, right? Gold is dead. Long live Bitcoin, whatever. It's over. Bull markets that have been going on for as long as the gold bull market has, they don't end like that. If it really was over, nobody would know. It'd be very quiet. It would happen over time. It would be a slow grind, and nobody would realize that we were making a top. Because the markets don't make it that easy. They don't ring a big bell and say, aha, you see this big sharp decline. This means it's over. No, these big declines are meant to scare out the weaker players. as I've said in the past, all of the biggest moves in a bull market are down. So when you get the biggest one-day moves, they're not up, they're down because you have fear. People are afraid that the bull market is over and they bail. And probably there's no, better measure of the fear than in the gold and silver mining stocks, which were clobbered today. The GDX and GDXJ were down about, 10% on the day. But think about this. Gold set a record high yesterday. Today, the GDX is down 14.5% from its record high, with gold making a record high yesterday. The GDXJ is down 15% from its record high. I mean, we're almost in a bear market, technically, right? 20%. And in fact, all the silver stocks are in bear markets. Even though silver hit a record high last week, they're already in bear markets. They're all down more than 20% from their peaks. And if you look at individual gold stocks, right, there are several gold stocks that are down now 20% from their highs last week. So in a full bear market, just based on this one correction, gold is only down 6.5% from its record high. And all of that happened today, right? That whole thing, that whole decline today. Now, despite that, gold is still up 56% on the year. It is having a phenomenal year. But if you look at where gold stocks are trading now, they have lost all of their gains since gold was at 3,750. So the whole move from 3,750 to 4,125, gold stocks have now gone sideways. And of course, when gold was at 3,750, there were probably a lot of people that thought, well, we're not going to get to 4,000. They'll have a lot of resistance there. Little did they know that gold not only got to 4,000, it almost got to 4,500. And the fact that we've now worked off the overbought condition and we've had such a big pullback in the price of gold, yet we're still above 4,000. That is very constructive. In fact, none of this noise, right? None of the volatility of the last 3 days should even matter to gold mining stocks because they're businesses. When you're buying into a gold mining stock, right, you're buying the income stream. These companies are going to kill it in their earnings. Even with the big sell-off we've just had, gold is sold off to 4,125. Silver's sold off to 48 and change. These prices are much, much higher than they were last quarter. They far exceed any analyst estimates of what the prices were going to be. Their earnings are going to be blowout for Q3. They'll be blowout again for Q4. And look at oil prices at about $56 a barrel. Now, I don't think oil is going to stay this cheap for long. It might get a little cheaper before it takes off. But in the meantime, this is fantastic for these gold mining companies. That's about half their costs, right? Is energy, is oil. And so one of the big problems that the gold mining companies have had has been rising costs. Costs have been rising too fast compared to the price of gold and silver. Well, now the price of gold and silver is skyrocketing and their main cost has actually come down a bit. So this is really going to improve their margins. So the fact that gold and silver stock investors ran for the exit so quickly because gold fell from 5,400 to 5,100, forgetting about the fact, 4,500 to 4,100. I keep confusing gold and silver. And silver's into $50. Gold's into 4,000. But we got that big drop, but we're at above 4,100. Think about that. We've just had this huge drop, the biggest, one-day point drop, probably, dollar drop. I'm sure there were days where gold went down more than this percentage-wise. I haven't researched it. But it's never gone down dollar-wise because, of course, gold has never been this high. So $100, $200 is not as big a deal. And believe me, one of these days we're going to see a $200 update. It's coming. But it makes sense that the first $200 move was down. In fact, up until yesterday, when gold was up over 100, I had never seen gold up $100 in one day. Yesterday was the first time I believe that's ever happened. And it was followed by the first time it's been down more than 200. Look, I do remember at one point it was down a couple hundred in a day, maybe back in, I forget, 2015. I remember a day, there may have been a $200 drop. It may have been over 2 days, but not as big as the one today. But of course, it was a much bigger percentage. But all of this is noise, right? This is all about scaring people out of the market. I mean, part of it is just how markets operate, right? Bull markets climb a wall of worry, and they like to shake out the excess baggage. You know, a lot of people get into these markets, traders, they take leverage positions. They're in futures. They use stop orders to limit their losses if the markets reverse. And I bet a lot of people who kind of came late to the party, who put in stops, got stopped out, maybe people who've been in it for a while and who've been moving their stops higher and higher to try to protect their profits, probably got flushed out. Probably very few people expected this big a move this quickly, especially after yesterday's record close and strong gains. Probably a lot of people did not expect this big a collapse on Tuesday. And to me, I think, you know, the mainstream, Wall Street, they probably had to, you know, bring out the big guns to really try to scare people away from the gold market, because they saw that gold was getting a lot of media attention, that the public was finally maybe waking up. Bigger investors were now talking about it. And so they needed to scare people away. Oh, look, gold is too volatile. You know, it's not, you know, you don't want to invest in it. It's just a wild commodity. It's got no real value. You know, who knows it's going to happen. And so I think, you know, from our perspective, because we want to keep on buying gold. I mean, I'm not anywhere near wanting to sell my gold. And so to me, I love any kind of pullback because it enables more customers to get in at better prices. And, you know, it enables me. I mean, I actually bought another mining stock. I bought into I picked one that was down, that I had a smaller position, and I used today to add to it. You know, hey, this is a great, you know, the stock I bought was down more than 20% from its peak. So already technically in a bear market. And I figured, hey, you know, let me buy some. And, you know, if these stocks come down more, I'll buy more, right? I mean, I'm not buying the highs because I've got, you know, pretty large positions already. But if the market is going to start giving away stocks, right, I'm not going to look a gift horse in the mouth. And I encourage, you know, my clients too to do the same thing. I mean, when the weak hands are getting flushed out, that is an opportunity for the stronger hands to increase their positions. But of course, again, the Bitcoiners, as I mentioned, you know, they're all, happy and having a little party here and popping the champagne because they think, oh, finally, Bitcoin is going to go up. You know, Bitcoin, which had sold off all the way down, I think about 104K, which of course is still a lot of money to pay for nothing, but it had that flash crash. And right now it's back up to just almost 111,000. It got higher on the day. I think it got up above 114,000. And I think the catalyst for that rally was the sell-off in gold. That's what got the Bitcoin community excited, because I do believe that the biggest threat to Bitcoin is gold, right? And I think gold's resurgence is really the pin that's going to prick the Bitcoin bubble. Because I think what really got Bitcoin going was gold's 12-year consolidation. Because Bitcoin came on the scene in 2011, really, 2012. I mean, although on my scene, I mean, I didn't buy it, but I mean, that's when people started buying it. It didn't really make the media. They took notice in 2017 when we had the big run, up to 1,000, right? But it first came on the scene in libertarian circles, hard money circles, back in 2010, 2011-ish. And that's when gold peaked out at 1,900. And then gold really did not go anywhere until last year. I mean, yes, in 2020, it made a marginal new high. It got above 2,000, but even that was not that much above 1,900 from 2011. And then it sold off. Gold didn't really get above 2,000 until Q1 of 2024. So you had about 13 years where gold didn't go anywhere. And a lot of people who own gold during those 13 years got very frustrated because they had expected it to go up, especially with QE1, QE2, QE3, Operation Twist, all this stuff. A lot of people expected a higher gold price, including me. I mean, I remember I was forecasting $5,000 gold back then, and we didn't get there. I mean, we topped out at 1,900, and so people were frustrated. And then they looked over at Bitcoin, and Bitcoin came on the scene, and it was marketed as digital gold, gold 2.0, a better version of gold. And lo and behold, it kept going up. And of course, initially, a lot of the true gold guys who understood gold laughed off Bitcoin. That's crazy. That's nonsense. I'm not going to buy that. But of course, a lot of people didn't know it was nonsense, and they bought it. And that bid up the price. And so when Bitcoin all of a sudden maybe was 10,000, and it had been going up and up and up, and gold was going nowhere, there were a number of people who probably decided, you know what, let me take a shot at some Bitcoin. I'm frustrated with gold. It's not going anywhere. Bitcoin is going up. And I think that really kicked into a higher gear when the ETFs were launched. Of course, Bitcoin was a lot higher by then. This, again, is early 2024, when gold, was about 2,000. And people were like, this is the top of gold. Let me get into Bitcoin. There was all this marketing and promotion on television, all these commercials. And now it was easy for people who owned gold ETFs and gold mining stocks and mining stock ETFs. They could just sell them and buy Bitcoin ETFs. And that's what they did. And Bitcoin initially continued to go up. But then when gold was rising, a lot of people just didn't believe it. They had been burned, and they didn't expect gold to keep rising the way it did. But now that gold has finally broken out, that, we're double 2,000, right? We're way above now the 2011 peak. The consolidation is over. Gold has built a phenomenal base, and now a new leg of this bull market that I think will at least rival, if not exceed, the earlier leg. Because before gold started the consolidation, it rose from under 300 to 1,900. That's a six-fold increase. A lot of people forget about that. We had to consolidate those massive gains. Now that they've been consolidated and we have this new base, it's a brand new bull, and we got a long way to run. I mean, I think my prediction of $5,000 gold that I made back then is going to be well exceeded. I mean, we can obviously get there before the end of this year, but I think we're going to get a lot higher. But the point I'm making is, now that real gold is performing, why take a chance on fool's gold? The whole selling point of Bitcoin now is gone. It was, hey, gold's not going anywhere. Bitcoin's the fastest horse in the race. Buy Bitcoin. Well, it's not the fastest horse in the race anymore. Not over the last month, over the last 3 months, 6 months, year to date, 1 year. Gold is beating Bitcoin. And gold stocks are beating it even more, even with today's sell-off. And now, of course, you've also got silver. So, and I think silver, which is beating gold year to date, obviously is beating Bitcoin by even more than gold. So you don't have to buy imaginary fake gold. The real thing is performing great. And I think that is going to be the nail in the Bitcoin coffin, because what I think is going to happen is a lot of that spec money that moved out of gold and out of gold mining stocks into Bitcoin ETFs, and then eventually MicroStrategy and other, ancillary crypto companies. I think a lot of that money is going to move back into gold and silver ETFs and mining stocks. Kind of like, people that are in a casino, because these are not your true hardcore Bitcoin believers, right? I mean, you guys, and you know who you are if you're watching this. Yeah, I mean, they're going to have to pry your Bitcoin out of your cold, dead hands. Of course, there's nothing to pry, and you can't hold it in your hand. But yeah, you guys will go down with the ship because you're true believers. It's a religion, and, there's nothing going to change your mind. But I think most of the money that moved in the last couple of years, these are not diehard true believers. I mean, they don't even have, their own code, right? They don't even have their own secret words. They don't self-custody. They have their Bitcoin in their brokerage account, right, through an ETF. So they're using third-party intermediaries. Why did they buy Bitcoin? They obviously didn't buy it to use it for anything. They didn't try to escape the system. They just tried to get rich. They were told that Bitcoin was going to 1 million, 10 million, right? You're an idiot if you don't buy Bitcoin. I mean, Donald Trump is going to make America the Bitcoin capital of the world, right? That guarantees success because now you've got the Trump administration behind you. The U.S. government's going to start buying Bitcoin. So you better buy it first. Front run that trade, right? So a lot of people are like, yeah, I want to make this easy money. I'm going to get in. And a lot of that money came out of gold, right? It came out of gold stocks. And I saw it in real time. I talked about it. We were seeing major outflows from gold ETFs and gold mining stock ETFs on the same days that we were seeing all these inflows in the Bitcoin ETFs, even though gold was going up. It wasn't like gold wasn't moving. It was just that people wanted something that they thought would move faster. And so they changed horses, right? Like people in the casino, right? You're at a crap table and nobody is making any money. People keep rolling sevens and everybody's losing their chips. And then there's another table nearby, and everybody is screaming and jumping up and down, and the rollers are hot, and they keep rolling numbers, and everybody's making a lot of money. You go over to that table. You want to get away from the cold table, and you want to join the hot table where all the action is, right? So you go over there, right? And that's what happened. The action was in Bitcoin, right? It wasn't in gold. Well, now that table's cooled off, right? People are starting to crap out. And now we got some new shooters over at the gold table starting to make some money. And I think people are going to look over at that other table and see all the excitement. And now they're going to say, you know what? I'm getting back over there, right? That's where the action is now. See, but the big problem is they're not going to be able to leave the Bitcoin table with their chips because there's no way out, right? Because all this money that came into these ETFs came in slowly over time, day after day after day after day for, well over a year. If all of a sudden a good chunk of it just wants out right away, there's no buying. I mean, we got a dress rehearsal for that on that flash crash that last Friday when Trump puts out a Truth Social post about 100% tariffs on China and crypto implodes completely off of a social media post. I mean, that's nothing, but it just shows you how much air there is under that market. If we ever got real selling coming out of these ETFs, real liquidation, not just a short-term flash crash panic, but people actually, I'm done, right? I don't want Bitcoin anymore. It's not performing. It's not doing what I was told. Meanwhile, the gold that I sold is doing what I always believed it would do. It's just finally happening. And I don't want this digital, BS gold. I want real gold. I want gold stocks. And the market is going to implode. That is why the Bitcoin community and the entire crypto community, in fact, is rallying together to be anti-gold and telling people. In fact, one of the big things they're saying is, hey, Bitcoin always follows gold. Gold goes up first, and then Bitcoin follows and surpasses it. So that's why you need to sell your gold now and buy Bitcoin, because the big Bitcoin rally is coming next. Except they promised the Bitcoin rally earlier. Bitcoin was already supposed to be a lot higher than $110,000, right? And the fact that Bitcoin hasn't been rallying with gold isn't proof that it's about to rally. It more likely casts doubt on the fact that it may ever rally, because if it was going to rally, I would say it should have already done so. With everything it's have going for it, from the Trump administration support to the Bitcoin treasury companies buying like crazy, the ETFs buying, the fact that Bitcoin isn't already much higher is a significant warning that something is wrong. Somebody has been selling Bitcoin, and it ain't you, right? There's an old saying, if you're at a poker table and you don't know who the sucker is, it's you, right? Well, if you own Bitcoin, right, and you're not selling, you're the sucker. You've been suckered into hodling by the people who are selling. A lot of smart money has been selling into all the hype that they created. And they're still hyping it up because they still have more Bitcoin to sell. And they want to convince everybody else not to sell, right? So they don't have competition. And of course, they want more people to buy, so they have some people to sell to. Meanwhile, what's happening in gold is really unprecedented. Not just this volatility, but the fact that gold is up year to date more than it's ever been since the 1970s. And again, this is not a coincidence that gold has never been this strong since the 1970s, because the 1970s, that was the last major monetary reset. And I believe now we're going through another one. In the 1970s, it was the U.S. going off the gold standard. That was a game changer. Now we have another game changer. We have the world going off the dollar standard, and they're going back to the gold standard. The world was on the gold standard before Bretton Woods, and even though they went on the dollar standard, they never left the gold standard because the dollar was the gold standard. It was as good as gold because it was backed by gold and redeemable in gold on demand. Nixon stopped that in 1971 with a major default on our commitments, and that began the huge gold bull market where gold went from 35 to 850, right? Now, the world is finally, over 50 years too late, rejecting that standard, right? The world agreed to go on the dollar standard because we made a commitment to honor dollars with real gold. In fact, the gold were the dollars. The Federal Reserve notes were IOUs for dollars that were, weights of gold. Well, we reneged on that commitment, but the world didn't renege on the deal. The world was like, okay, even though the dollar is not backed by gold, which was the basis upon which we agreed to this whole system, we're going to continue to have the gold as the reserve currency, despite the fact that it's now fiat, right? That was a mistake. The world never should have done that. They should have rejected fiat dollars and gone back on their own gold standard. But they played along, and that's what enabled this massive bubble to be built up. That's why we've had this huge, gigantic, bubble economy with trade deficits and budget deficits, and everything is a function of our ability to print the reserve currency instead of having to mine it, right? We just create it out of thin air, cost us nothing, and we can suck up resources and capital from the rest of the world that are basically been patsies. They've been, carrying our water. They've been bearing the burden and allowing Americans to live beyond our means, and so they are content to live beneath their means to make it possible. Well, this is a revolution. This is liberation. And I said this when Donald Trump announced Liberation Day. I said that he was liberating the rest of the world from the burden of propping up the U.S. economy and subsidizing the indulgent U.S. consumer. And so that's what's happening now. The world is going to go back to the gold standard. That's what they're preparing for. That's why central banks are de-dollarizing. That's why they're buying gold, so they have something other than dollars to back up their own currencies. They're going to back up their currencies with real money instead of backing it up with our fiat. And this is a game changer for the global monetary system, for the world order, especially for Americans whose life standards are going to be completely upended by the rug being pulled out from under us. So this is all happening. That's why we're seeing this big move in gold. And this is not the end of something. It is the beginning of something. This is not 1979, 1980. It's 1971, 1972. The move is just getting started. And that's one of the reasons that everybody, all the powers that be, want to downplay what's happening in gold. They want to laugh it off. They want to dismiss it as a speculative frenzy. They don't want to deal with the reality of the warning that gold is sounding. And they're hoping that they can call attention to the declines to discourage people from buying it. But I want to encourage as many people to continue to buy into probably the biggest gold bull market yet and probably the biggest silver bull market yet. This is not going to be the last time that we have a violent sell-off, but we're going to have these violent sell-offs from much higher levels than we are right now. And so you want to continue to take advantage of the opportunities that the markets give you by adding to your positions and telling your friends, letting your friends know, hey, we talked about gold and silver. You don't own any. Hey, we finally got a pullback. Here's an opportunity to buy. Go to Schiff Gold and buy on this pullback. Buy some silver. Buy some gold. 4,000 is the new 3,000. I was thinking that 50 might be the new 30 when it comes to silver, but it gets a little bit below 50. Just like when silver busted out of 30, it didn't hold 30 exactly. We crossed below 30 a few times, like we got below 50 today, but we didn't stay there very long. And I don't believe that silver is going to spend that much time below 50. And so while it's below 50, you want to take advantage of that and buy some more. Anyway, that's it for now. I'll be doing at least another podcast this week on my main channel. If you're not currently subscribing to the Schiff Gold YouTube channel, make sure and subscribe. We had about 81,000 views on the one I did last Friday and only 32,000 subscribers. So a lot of you who are watching the video are not subscribing. How hard is that? Just go back and subscribe, because I want to get the message out there, and make sure to leave me a comment, give me a like, because it helps with the YouTube algorithm. My larger channel has been shadow banned. Even though I have almost 600,000 subscribers, YouTube never recommends it. They bury it in searches because somehow, years ago they said I was spreading disinformation, which of course is their version of the truth, right? When the powers that be are lying, the truth tellers are the ones who are disseminating disinformation. But this channel, I haven't really been using it, and so it's under the radar, and it hasn't been banned yet. That's why I can get as many views on my Schiff Gold market wraps, despite only having 30,000 subscribers, as I get on my main channel with 600,000 subscribers. But the more you could do to help show YouTube's algorithms that you like the content is engage with it. So subscribe to the channel, watch the whole video till the end, give it a thumbs up, write a little comment, even if it's short and sweet. In fact, I like the short ones better because it's easier to read. If you write too much, I give up. But short and sweet is the best way to leave me a comment, and it's the best way to potentially get me to respond to your comment if I don't have to read too much. But do all that. And I may do another one of the Schiff Golds on Friday, or I may not, because I did this one on Tuesday. I may end up just doing my main podcast at the end of the week and also wrap up what happened in gold. But remember, go to schiffgold.com. If you already are a customer, you know the drill. If you're not, just go over there, schiffgold.com. We've got, again, you can load up your shopping cart. You can buy gold and silver on your own. If you need any help, I've got a great team of highly experienced specialists who can walk you through it and help you put in your order if you don't want to do it yourself through the shopping cart. Bye for now.